Welcome to the Financial Services Industry Sessions. For our first session, I'd like to introduce Oliwia Burdak, Vice President and Research Director at Forrester.
Hello and welcome. My name is Oliwia Burdak and I'm a VP and Research Director at Forrester Research. Today I want to talk to you about how you can embark on an end-to-end digital transformation and what that means in financial services. Firstly, of course, I have to start with COVID-19 because it continues to be top of mind for all of us. It has really disturbed all of our plans in the last year and continues to dominate agendas for the year ahead. That said, in financial services, I think COVID-19 hasn't yet caused a real revolution. It simply accelerated some existing trends. For instance, when it comes to customers, we already saw that decreasing customer trust in traditional institutions and increasing trust in non-traditional players such as fintechs or tech titans like Google, Amazon, Facebook, or if you're in China, Baidu, Alibaba, and Tencent. Those competitors that I have mentioned are also becoming the non-traditional competitors to financial services, which means that the stage that financial firms are competing on is at the moment global. And that global competition means also that the situation is becoming much, much tougher for financial services firms. And we're also seeing this fragmentation of the value chain, which means that people need to really think about when they enter their financial products in the journey that customers are going through. So that's on the side of the competitors. In terms of economics, we do see this long tail impact of COVID-19. We are expecting a big rise in the number of defaults and also the types of products that customers will be buying. And of course, decreased interest rates will also mean that there will be even stronger pressure on existing deposit business models because financial services firms are struggling. And in terms of regulation, we also have open banking that is leading to open data and open finance, further putting an acceleration into experimentation with different business models. And lastly, already before COVID-19, we saw this focus on sustainability. And now governments and companies are thinking about it even more as they're trying to build back better going forwards and thinking about how they can contribute to a better future for us all. So as I said, COVID-19 hasn't actually changed all of these priorities, but it has accelerated them going forwards. That means that, of course, financial services firms' business priorities are also changing in response. So we're actually lucky because we conducted a survey of financial services business and technology decision makers just before COVID-19 kicked off, so in December 2019 and January 2020, and then later in the midst of it, April and May 2020. And we saw this drastic change in priorities. So before COVID, firms, the top 5 priorities were really about growing revenue, about improving the experience of customers, reducing cost came third, and then of course improving products and services and better complying with regulations and requirements. 4 out of these 5 priorities have lost on importance since COVID. So instead, what's come to the top, we have this huge focus on cost reduction as companies scramble, as I mentioned, with a much greater pressure on their profitability. Growing revenue has gone down to number 2. But there are 2 things that have appeared on the list that weren't there before. And that is the focus on the ability to innovate, with firms trying to use the crisis to really improve their innovation abilities, to use it to leapfrog their competition and make the most of this changed environment. So that's one of these. And a second priority that also suddenly appeared in the top 5 is accelerating the shift to digital business. So this is precisely the stronger focus on digital transformation and making the most of technology in these vastly different economic and social conditions. The world, of course, continues to move, and in order to survive and thrive, I think we can all agree that the only things that firms can do is to embrace that end-to-end digital transformation. So what does that really mean? I think that going forward, firms will need to deliver on three ambitions that they will need to prioritize in the next few years. And those three are customer experience excellence, zero back office, and adaptiveness. So let me talk to you and tell you what I think these three things are and why they matter so much. So firstly, customer experience. So Forrester believes that we are in the age of the customer, where customer obsession and that understanding of customers is the main source of competitive advantage. Unfortunately, in financial services, we don't see all that much customer experience excellence. So Forrester runs its Customer Experience Index. It's a study that measures the quality of customer experience across different brands. So we've just run this study in 2020 to look at the quality of experience of top brands in Europe, US, and other markets and see how companies are doing. And actually, I've brought to you here a particular index. This one is for auto and home insurers in France. And as you can see, actually, the vast majority of these brands are not doing all that well. In fact, only 2 European insurers deliver really good experiences. In this case, you have basically the majority delivering okay or even poor experiences. So there isn't really a great deal of differentiation. And that means that customers themselves also don't necessarily know who to go with in order to have a better quality experience. And there's plenty that firms can do to change that. That's also because customers' expectations are going to be changing, and they have changed as a result of COVID. So we've asked customers how their behaviors have changed as a result of COVID-19. And we see a vast amount of difference in terms of, for instance, what sort of financial activities they conduct and how they conduct them. So this particular chart shows you the adoption of digital channels for a variety of financial services activities. For instance, we see that a number of digital laggards actually accessed their financial accounts online on a computer for the very first time. This goes from a relatively low 12% in the US and the UK to as high as 20% in Italy. Even some activities that firms traditionally say customers prefer to do with a person over the phone or in the bank branch, they are actually doing for the first time online. So for instance, filing an insurance claim has increased over this period. We see a number of insurers reporting that a lot of customers are filing their claims online, something that they traditionally would have done over the phone. And even as complex an area as purchasing and opening new financial products, where again we often see that customers maybe would have liked that reassurance from a person, actually as many as 12% of online adults in China actually opened a new financial product online during COVID-19 pandemic. So what does that mean? We've actually seen that most of the customers have had positive digital experiences with their financial activities. So that also indicates that there will be a change of behavior, and customers will be relying on their financial services providers to provide more of those experiences online and delivering great experiences going forward. Many firms think they've done digital very well already because they might have a mobile app or they might have a web experience, but actually that's often just scratching the surface. So think about all the different activities that customers can do, and a lot of that digital experience will actually rely on great digital operations. So things like real-time underwriting, automated fraud detection, claims processing, faster payments, identity verification, all of this really feeds into how customers perceive their interactions with a brand. So when companies tell us that they've updated their mobile app, we often say that this isn't enough, because the quality of the experience, let's take a claims experience, will really depend on what happens in the background, often in the back office, what sort of data insurers receive, how quickly they can process it, how quickly they can make a decision, how quickly they can make a payment. So all these different functions that may not be customer facing actually have a tremendous impact on customer experience overall. So think about how you can go about changing this. We often recommend that that financial services firms start with a customer experience journey map. Let's say the experience of claim, as I mentioned earlier, and then they have to use that as a tool to see how the wider company ecosystem impacts that journey. Claims officers, loss adjusters, and so on. And that then leads to thinking about what sort of changes they need to make across people and data and process and technology, so across all of their operations, in order to deliver that great customer experience. So this is the complexity that I think eludes a lot of financial services firms, and why the quality of the experience is maybe not the best, even despite all the investments made in digital channels. The other thing that I always hear is about automation, and whether automation, if we embrace full automation, whether that will deliver a great customer experience. Well, I often respond that full automation at the moment is neither desirable nor yet achievable. So what we recommend is actually this vision for zero back office, which is a strategic plan that leverages methods, technologies, and architectures to make back office operations more efficient, more seamless, and more automated. So it's a strategic plan. It's more than just an ambition, but it also recognizes that we are not really there when it comes to full automation. But what you are trying to achieve is definitely greater efficiency, more seamless experience, and more automation. Zero back office is also not just about a single technology. It is a combination of methods like design thinking, for instance, redesigning that experience. Technologies, certainly automation technologies play a role here, but also architectures. So how data flows, where capabilities reside with companies, and so on. So it's a really complex ambition that hopefully you can move towards going forward. Certainly, there are a number of technologies that can help companies with intelligent automation. So at Forrester, we've actually mapped all the different technologies that play a role in intelligent automation. And we plot them on this 2x2 axes, where the y-axis basically focuses on business value, from high business value to low business value, and the x-axis focuses on maturity. Low maturity versus high maturity. And that helps us understand how companies should be approaching all these different technologies, whether they should be just experimenting with this, as for instance RPA-based employee robots currently are in the experimentation phase, whether they should be investing in some of these technologies, such as for instance process mining, to understand the types of processes that you can automate, whether they should maintain the overall investment or even consider divesting from some of these technologies. So as I mentioned, while full automation is neither possible nor desirable, you do need to have that strategic plan that includes technologies on how you're going to move forwards to making your operations more seamless, more efficient, and more automated going forwards. And I've hinted that technology is not the only thing that you need to be worried about. In all of our research on automation and back office, we understand and hear from companies that actually it's often their culture that is holding them back. And that culture of being risk averse, being quite traditional, can really change your transformation and make it very, very difficult. So we recommend basically this vision of becoming future fit for a very, very uncertain and very, very changeable future, where you need to really have that resilience and creativity and adaptiveness so that you can adapt to whatever is coming your way, and also build your operations in a way that allows them to retain the resilience despite everything that might happen. So we've obviously experienced COVID-19, but the next issue might be climate change, and therefore that focus on resilience is very, very important and probably beats other things such as operational excellence, and just kind of the speed, because it's all about how well you can respond to the changing environment. So I hope that has given you a good sense of how you need to adapt going forwards. Let me give you a definition of what we mean by adaptive enterprises. As I mentioned, it's about anticipating tomorrow's customer and employee needs today, and then proactively reconfiguring themselves, including their business model, to meet customer and market demands. So this means really looking forward rather than backwards, and being prepared to really change everything about yourself, whether that's your business model, your product set, or operations, and how you deliver value to your customers. So a very, very, I think, different vision for what a company should be and how it might succeed going forward. So just to come back to my initial opening line about why it's so important to embrace end-to-end transformation. It's important because you need to really fend off new competitors. So I mentioned CX excellence, zero back office, and adaptiveness. And actually, you already have new types of competitors that do very well across all of these areas. So in CX excellence, we have one of the challenger banks, Monzo, for instance, that was one of just 2 European banking brands that achieved the excellent score in Forrester's Customer Experience Index. And they do that through their commitment to customers, through their focus on financial well-being, and through those smooth operations. So Monzo is a great example of CX excellence. When it comes to zero back office, we've got Lemonade. And Lemonade is an insurtech that has scaled tremendously in the last few years. And what they do is they actually run this automation index. And the automation index measures basically how many customers there are to staff numbers. And when they started back in 2016, I think it was just 96 customers to 21 staff members. So the automation index stood at 5. By 2018, they only had 100 team members, so they didn't grow all that much. But those team members would support 250,000 customers. And so the index stood at 2,500, and they continue investing in automation capabilities to ensure that they stay ahead of incumbents and traditional competitors. So that's how they kind of achieve that zero back office vision. And lastly, on adaptiveness front, we have Oak North. So the SME banking, small business banking lender in the UK. And what they've done is that they adapted very, very quickly to COVID-19. They actually produced a COVID vulnerability rating framework that uses proprietary subsector-specific COVID-19 data and stress scenarios to enable lenders to re-underwrite some of their loans and to constantly monitor the quality of their loan book to see how risks might impact their portfolio going forwards. So these 3 companies, I think, they are 3 new types of competitors, but they really show how much you need to change across these 3 areas: customer experience excellence, zero back office, and adaptiveness, in order to succeed in the future when you compete with new types of challengers. So I will close with that. Thank you very much for joining me today, and have a wonderful rest of the conference. Thank you.
Welcome to our customer panel session with Georg Hauer, General Manager for DACH and Northern Europe at N26, and Timothy Hall, Program and Project Management IT Lead at IMC. This session is moderated by Greg Williams, editor of Wired UK.
Welcome to this Workday Industry Insights session. I'm Greg Williams, editor of Wired UK. Today we're going to discuss how you can unlock more value from your data in order to compete in the fast-changing world of financial services. And to delve into this fascinating and important issue, we have two industry experts with enormous experience. Timothy Hall is an IT professional with over 20 years experience working in agile, fast-moving, tech-focused environments. As program and project management IT lead at IMC, a technology-driven trading firm, he's responsible for back-office systems and delivering transformational programs and projects across the globe. Georg Hauer is General Manager of DACH and Northern Europe at Berlin-based challenger bank N26 and oversees the business in 15 markets. Besides the home markets, Germany and Austria, he's also responsible for new growth markets such as Ireland, Poland, the Nordics, and Slovakia. Additionally, Georg oversees N26's Vienna Tech Hub, growing the capabilities of the development teams to support and drive further innovation across the N26 business. Great to have you with us today, guys. Thanks for joining us. Let's start with a little bit of context so that the audience understands a little bit more about IMC and N26. Tim, maybe you can kick us off and tell us a little bit more about IMC. Give us a sense of your business model.
Thanks, Greg, and thanks for the kind introduction. IMC operates in the ecosystem of the financial markets, and we are what is known as an electronic market maker. So what that means is that we are trading on over 100 different trading venues around the world. And when I say trading venues, you're thinking of NASDAQ, New York Stock Exchange, the FTSE. And on those venues, we're looking to offer a buy and a sell price for all of the products that we're trading on. So our business model is based around offering the most competitive price on both the buy side and the sell side of the products that we're trading. And our margin comes from the difference between the buy side and the sell side. And for us to do this, we actually need a lot of technology. So we need to be able to consume a lot of data. Prices change very, very quickly. So you're then not looking at milliseconds or microseconds. I think these days we're actually looking at nanoseconds. So we need to consume a vast amount of data, have a very well-established and developed pricing model, put prices out to the market so that a counterpart will then trade with us.
Great, thanks, Tim. Georg, same question to you. Can you give us a bit of a sense of the N26 business model, please?
Yes, happy to do that. So N26 is a mobile bank that is operating since more than 6 years. And when we started, we have reinvented the way people bank directly on their smartphone. And we have not just created a fancy app that is used on a smartphone, but rather we really thought through how would you build a bank from scratch and how would you rebuild every single banking process. And that's why when we started, we noticed that the account opening process was a real pain for customers, because even if you could start the account opening online, very often it still involved a paper form which you had to sign and send back. And that's why, for example, today you can open an N26 account within less than 8 minutes, and you can put your card, a digital version of your card, directly on your smartphone and start banking. Data is a very important aspect of that, because at the very heart, we're not just a bank, but we are a tech company. And our objective is to leverage data in order to support our customers, the millions of customers globally, to have a better and more intuitive banking experience, and only see what's really relevant to them.
Yeah, this is super interesting. So they're very different business models, both of you have, clearly. But clearly, it's very important that data and technology is absolutely at the center of what you do. So really interested, and maybe, Tim, you could take this first again, how you connect that operational model to the back office, to finance, HR functions, things like that.
Yeah, so as a company, we have a global footprint. So we're based out of the Netherlands, but also have a large office in the US and in APAC. I think the lines between the different functions within the company are pretty short. So everyone's talking to each other. And everyone plays a very important role. So from an HR side, although we're very tech focused, very data focused, and we want to be out the fastest out there, we also it's basically a people business, right? So we need to get the right people in. So that's where HR comes in, for both the recruiting side and then also for making sure that people develop in the right direction. Finance is really our source of truth. So our front office is about trading, and then they have their own view of the world, and obviously we have to go through the right processes to reconcile that with the outside view, and that's where the finance comes in. And there's basically data flowing between the front office and the back office on a real-time basis, and that's actually been a change over the last 10 years. In the old days, it used to be like T+1 reconciliations you would get between the front and back office, and now we really do it real time by having data coming from all required sources in real time.
Wow, so that real-time data flow is so crucial to the business. Georg, it'd be great to have your sense also of this connection between the operational model on one hand and then the back office, finance, HR functions.
Yeah. For us, the objective is to make banking and, in fact, any customer process as intuitive and simple and seamless as possible. But this doesn't extend only to customer-facing processes, but also any internal processes. And ultimately, as a tech company, we're very much a people-driven company, because it's not just technology that drives the world, but it's the people that develop this innovative technology that really move the industry. And that's why we hire globally some of the best talent in order to help us disrupt the banking industry. So for us, the bank and the people and the financial processes in the back end of our bank are at the very core of what makes our internal processes also seamless and fast and ultimately, of course, efficient.
So clearly, both of you are, well aware. I don't have to tell you that the ability for businesses to leverage data for competitive advantage has clearly been something that we've all been talking about for quite a long time now. Georg, maybe I can start with you with this next question. Can you talk a little bit about, did the pandemic shift things for you? Has COVID added extra challenges when it came to optimizing that back office operation?
Yeah. So COVID, of course, changed a lot of things, but in fact, not necessarily to the negative, because consumer behavior changed quite significantly, and the banking industry in general is moving towards digital. In fact, digital only, and people are getting used to banking online, which is very beneficial for us as an online bank. However, back offices, of course, it does create a new pressure, because it basically the crisis forces us to reprioritize certain projects, and when you have to decide whether or not your software engineers focus on developing a new customer-facing product or implementing a new ERP software internally, then typically, I know it from other companies, it would be an easy decision to deprioritize internal software. We decided, however, in contrast, to prioritize it, because we wanted to get an even stronger control over our people and financial processes. And because the bigger we grow, I remember within a few years, we grew from a few hundred, or in fact a few dozen employees, to well over 1,500 employees in multiple markets around the world. So having a really strong ERP software was essential for us, and that's why we in fact not just deprioritized it, but in fact considered it as an important strategic initiative.
Sure, it's so important for a fast growth startup like N26. Tim, clearly huge kind of market volatility over the last year. Can you talk a little bit about how the pandemic shifted for you in this context as well, please?
Yeah, so with respect to market volatility, that obviously does affect us. So the trading volumes go up, and we actually still have to be there to support the products that we're trading. So we need to build a lot of resilience into our systems to do that. And to be honest, that resilience had to be there before the pandemic, and it served us well actually during the very high volatile periods of the pandemic. So I think as a company, we always need to bring in resilience to everything we're doing, and to make sure that we can keep providing the prices that the market needs, and provide the liquidity that the market needs to keep things going. I think the pandemic actually for us was a big testing ground to really prove that in these super high volatile markets, we are actually able to still stay there and to still stick within those markets.
Yeah, yeah. And can you give us maybe some insight? I'm sure a lot of people watching will be really interested to know how you have leveraged data to connect that front end of the business with the back office. How have you actually thought about data in that way?
So data runs through all of our. So data runs through all of our organization from the front to the mid to the back office. The trading aspect of it is taking data, calculating the correct prices, and then making sure we have a competitive price that goes to the market. Once a trade's been done, we then need to really reconcile in the real world. That trade is going to then adjust the prices for our next trade in that particular product. So we have data feeds going from the front to the back, and then we also have data feeds going from the outside world to our back office. And one of their main tasks is to reconcile that our real world view, or our worldview, is actually the same as the view outside that everyone else has. Because if it's wrong, we can then make wrong decisions or we can do wrong things. So we really need to be able to, in real time, have a great understanding that what we're seeing is what the market is seeing as well. And that's how we're connecting things. We then have the finance side of things. That's a source of truth. That comes more at the end of the month. So we basically get feeds from a lot of the parts of the financial markets ecosystem, the clearinghouses, which show what our positions are, and we again reconcile that with our internal positions, and that then becomes the sort of source of truth, the journal for the coming month. So we have data actually coming from everywhere and going everywhere, and it's more about reconciliation to make sure that we have the right source of truth.
Thanks, Tim. Georg, same question to you, really. How do you leverage data so that you can connect that front end of the business? Obviously, you're dealing with consumers who are expecting, a fantastic service at all moments, but obviously there's a huge kind of, amount that has to happen under the hood to enable that. How do you connect that part of the business with the back office?
Yeah. So for us as a bank and a tech company, having accurate real-time data is essential, of course. For us, it was important that we build one internal data warehouse, which serves as a single source of truth for our understanding of the financial and non-financial KPIs. And this data warehouse is connected with all our self-built customer-facing applications. And because it's all in one ecosystem, we actually have a real-time view of our business, and not only of our customer-facing KPIs, but really all of them. And that truly helps to steer and control the company on a daily business and a daily basis, but also running it on a long run.
Right, I see. And presumably Workday has been able to support you with areas like what? Data integration, data modeling, analysis, insight. If you can talk a little bit about that, and how you've built that in Workday into your operational model. Georg, maybe if you could continue, that'd be great.
So in general, it's as you know, we've just started our project with Workday. So we've launched the software in December, and we're very happy with how smooth things are going internally, and it clearly helps us to reconcile our P&L and our financial data in a real-time basis. In general, what was very important for us when implementing the software was a very easily adjustable, to ensure that the business processes are easily adjustable to fit our needs. And in fact, because we are a very fast growing software and tech company, very fast changing needs. And on the other side, I would say it clearly helps us also the massive, I would say, the fast growing transaction volumes that we're seeing from customers and the millions of customers that we have around the world. It clearly helps us to get a stronger real-time view on how the business looks today. So far, what I've seen in the first couple of weeks is very positive, and I'm definitely looking forward to see more impact of the software in the next few weeks and months.
Tim, same question to you. Workday software, what have been the benefits from your point of view?
Yeah, so we're in a slightly different position. So we've actually been live with Workday for, I think, almost 8 years. So we were actually one of the first customers of Workday to go with their finance module. So it's pretty much well embedded within our organization, and it's used by all of our regions. So now we have all of our financial data, all of our HR data, all of our recruitment data in one place. And from that, we're able to augment it with other data and also build dashboards that we need to have a real source of truth cutting across all of these areas in one place. So for us, it really helps that we have it. We have this one source of truth, because we know we don't have to spend time reconciling it. I think before you had separate systems with HR and recruitment data and finance data in different places, and you would actually waste time doing reconciliations. We now also can have a real-time view as to how things are going, and I think for us that's how we helped. How Workday's really helped us. Also, because everyone's used it or using it across the globe, we've been able to standardize a lot of our processes with the finance teams and with the HR teams. So that's also really helped us.
So I'm really intrigued to get both of your thoughts on the next question. Clearly, resilience is something that everyone in business is talking about, and it's going to become, I think, a key aspect of every kind of conversation in every boardroom. Clearly, though, you are both in very, very fast-moving. Finance is a fast-moving industry. How do you, and Georg, maybe you could start with this, please. How do you best balance that speed you need in order to be this incredibly fast-growing startup in a real-time environment? You need that agility. How do you balance that with the resilience now that we all have to have in business?
Yeah. So in reality, the needs of a business change over time, and that's why also the need for the balance between speed and agility does change. I think that's where the importance of flexibility of a software comes in. And in terms of how to decide where you are in the need of balance and resilience and speed, it's clearly that there are trade-offs need to be made. The question is just which type of trade-offs. At the point when we were in a hyper-growth phase, where we were adding hundreds of thousands of customers on a monthly basis, especially when we're entering a new market, for example, the United States about 1.5 years ago, it's really important to be fast, because otherwise it would be very difficult to take management decisions for a market where we have hardly any data. So here speed is clearly important. At the same time, for very established markets, such as, for example, Germany, the agility of making sure that we serve very different types of customers and we can really deep dive into specific aspects of the data is more important than the speed of getting constantly new type of data.
Okay, that makes a lot of sense, Georg. Thank you. Tim, I'm really interested to get from you actually your sense of obviously you're in a very heavily regulated industry, and integrating new pieces of regulation through the business is always going to be sort of tricky. How do you do that with the minimum of disruption?
Yeah, so we operate within the financial markets. We are probably one of the most heavily regulated industries to operate within. And because we trade on over 100 trading venues around the world, we actually have numerous regulators that we have to make sure that we adhere to their rules. Some of the rules are take quite a lot of effort to implement. So we take it very seriously. In all of our regions, we have compliance teams that are solely responsible for making sure that we know the rules, and secondly, that we are then compliant with the rules. And for big things that we know are coming, I think the way that we deal with it is just planning. So some things, I can give you an example. Last year in Europe, there was something called MiFID II regulations that came out. They went live, I think, on January the 3rd, 2019. It's not an option not to be ready. You have to be ready at that point. And the way that we were able to do that was to start early, have a good analysis on how it could affect us, and then over time, make sure we put things in place to ensure that we were ready on January 2019. So for us, it's not an option not to be compliant with the regulations, and we take it very seriously and have the teams and also the resources to deal with that.
Georg, clearly you've got a huge amount of organizational data, well, a huge amount of data, a huge amount of organizational data as well. I'm intrigued for you to maybe speak to the audience a little bit about on any advice you might have about how to best optimize the measurement of organizational data and how you can then translate that into really actionable insights.
Yeah, that's a great question. Ultimately, this will really differ across companies, and it's every company truly has to understand the drivers of their own business, of their own organization, that really matter to them. For us, for example, it's important since we grew very quickly, people data was very important because on the one side we operate in very different legislations across different markets. So in our office in Berlin, there might be different standards as in our office in Barcelona or Vienna, and or New York. And on the other side, it's we just basically had to understand what we really want to understand. And for example, since one of the objectives is to hire the best possible talents, that's actually not that's not the full goal. The full goal is to hire and retain the best talent. So what's important is that the recruiting team understands not only what percentage of offers we give out are actually accepted by candidates down the road, but also how do those people perform down the line, and are we able to retain those talents we get into the company? Because a typical pitfall of fast-growing consumer companies is the recruiting team gets a lot of smart people on top of top of the funnel into the company, and then 6 months or 8 months down the line they drop out because they either are not set up for success or are not happy in the organization or not happy with the role. So connecting data across the entire people organization and not only look at isolated recruiting KPIs is important to grow a company organically and put employee satisfaction truly first.
Yeah, thank you, Georg. That makes a lot of sense. And Tim, back to you now. Clearly, you've talked about how COVID has created a lot of volatility in markets. I think it'd be really interesting to hear you talk a little bit how you leverage data for scenario planning and coping with the unexpected. How do you think about that?
Yeah, so we have very extensive risk systems that operate within our own worlds, and those risk systems are responsible for calculating what our possible risks could be in a month or whatever. So a good example of this is it's called a value at risk calculation. What does that do? It looks at all of your positions, so the things that you hold at a particular moment, and then it can calculate what your risk is of losing something, say in a month's time. So we do, and actually when I first joined IMC a number of years ago, this was something that would happen overnight, and the calculation was just so onerous. It would take 8 hours to be able to create a proper number for VAR for the company. So we now are able to consume vast amounts of data of all of our positions, then possible price movements based on historical data, based on whatever, and process that to create a real-time VAR. So we have a real view as to what our risk is at that moment. And then if something happens, there's still a human element. So if something goes above what we expect it to be, then somebody can step in and then take the right steps to reduce our risk. So leveraging data to reduce our risks is actually a key thing in what we're doing.
And I'm intrigued to get both of you to think a little bit about the future now. If you look forward about to the challenges, the opportunities that you face in your different businesses, how could a software vendor like Workday support you to meet these challenges and opportunities? Maybe Georg, we could hear from you first, please.
Yeah. So for us, one of the biggest challenges as a fast-growing tech company is forecasting. Because if you're shooting for the moon, it's and essentially anyway plan to either double or triple in any given year, it's sometimes still extremely important to understand what's the delta to our forecast, especially because we also have to hire for that. It's so especially, for example, for customer service is one of those functions that actually requires, if you have more customers, it does require more people. So it does make a difference whether or not we grow by 4 million or 3 million customers, or potentially 6 million customers in the next 6 months. And for us, it clearly helps to have a stronger and faster way of adapting our forecasting models. At the same time, also connecting different forecasts. For example, the financial plan with the growth plan and the people hiring plan, to connect all of them to understand if we change one variable, let's say we grow by an additional 1 million customers in the next 6 months, and what does this mean for our financials? What does it mean for our people and onboarding schedule?
Thank you. Same question to you, Tim. How can Workday support the challenges and opportunities you see upcoming in the coming months and years?
Yeah, so the way I see companies like Workday fit in, we have a big tech footprint ourselves within our company, but we want our tech footprint to focus on our front end business. And how companies like Workday can come in is that they can basically give us the sort of commoditized technical ability to be able to run our finance operations and our HR operations as efficiently as possible. And also, when I look at finance and HR and also recruitment, we need to have the right data available. So we want systems and companies like Workday to be able to give us that data real time, so we can then make decisions on that data. Automation is also a challenge or an opportunity for us. So within all of our functions, we're looking to automate as much as possible. That then gives the finance controller time to actually analyze the data that you're given. I mean, you can get too much data, and if you don't have time to look at it, then there's no point in having it in the first place. So companies like Workday, with their focus on automation, and also with their focus on introducing new technology to, say, the finance world, helps us give our financial controllers or our HR operational people the time to actually look at and then act upon any data that they're getting from these systems. Because a lot of the operational work that they would be doing before is taken away from them by systems such as Workday.
Okay, great, guys. We're pretty much out of time, but I have one final question for both of you. And really, it's, thinking about people out there watching, what 3 key pieces of advice do you have for the audience in terms of how they can unlock value from data to optimize that connection between the front end of the front end of the operation and the back office, obviously taking into account the very fast changing nature of your businesses? So maybe, Georg, we could hear your tips first, please.
Yeah. So the number one priority is to really understand the customer need, to understand what problem you're really solving for. Because too often data is collected, or we try to artificially solve a problem that really isn't a problem, or can be solved in a much better or faster way. The second aspect is to understand how to really rethink processes internally, and don't just try to tack on a new module or new software onto an existing monolith. Because way too often we actually add complexity by adding new software, rather than just really rethinking how we process analytics. And last but not least, analytics and data is not just a tool topic, it's a mindset topic. So you really have to invest into training and development of your team to enable them to really use that data and use the tools, because otherwise even the best possible tool and the best available data won't help you to solve your problems.
Thank you, Georg. Tim, your 3 tips, please.
Yeah, so I would say it's important to get the data that people need to the people that can interpret it and understand it as simply as possible. So don't try and make some complex ecosystem up. Don't try and make it too big. Start small. to get the data that they need to make decisions on. Have a clear sense or source of truth. So I think in the past there's been all these data silos. They're all operating individually, and sometimes they're coming up with different answers. So have one source of truth. That very much helps in terms of knowing that the decisions that you're making are the correct decisions. And then I think having the people there to be able to actually interpret the data, simple KPIs that really are meaningful for your business, and that they understand them. So sometimes I think you can get a case where there's just too many KPIs and no one really knows which ones to follow. So a few simple KPIs which really show where your business is going are the important ones to first focus upon.
I feel like we've barely scratched the surface, guys, but thank you so much for sharing your insights today. It's been a fascinating conversation. I think that people will have got a lot of value out of it, and they really, I think, hopefully have gone away with some really actionable insights. Thank you so much for your time today, and thank you out there for watching. Enjoy the rest of your day.
Our final session is with Viren Patel, Industry Advisor for Financial Services at Workday, Jim Gahagan, Principal Solutions Marketing Manager for Financial Services at Workday, and Brendan Sung, Partner at KPMG.
Hello, everyone, and welcome to today's session, Unlocking the Value of Your Data, the Key to Competition in the Changing World of Financial Services. My name is Jim Gahagan. I'm the Industry Marketing Leader for Financial Services here at Workday, and it's my pleasure to be joined by two colleagues today from KPMG as well as Workday. I'd like to introduce Brendan Sang. Brendan?
Hi, Jim. My name is Brendan Sang. I'm from KPMG. I'm a partner in the UK FS consulting business. I've been with KPMG for over 10 years now, and I specialize in large-scale technology transformation in the financial services industry.
Viren?
Yeah, thanks, Jim. And hi, Brendan, and hi, everyone. I'm Workday's Financial Services Industry Advisor in EMEA. As part of my role, I provide insight into how Workday provides value to financial services organizations. Very quickly, my background is in consulting, previously with a Big Four consulting firm, and have over 20 years experience in business and finance transformation enabled by technology. And I should say, very glad to be part of this panel today.
Thank you, both of you, for joining us. We heard earlier today from some of the customers of Workday, but also from Oliwia from Forrester, and talking about the changing landscape in financial services, and a couple of things that she hit upon were this idea of customer experience and customer excellence, and the need for that as we move forward, as well as back office modernization and the need to be more adaptive and more agile. So, Brendan, as you talk to some of your clients, what are you hearing from some of those clients in that particular area?
Yeah, absolutely. I think the industry is going through a massive scale and pace of transformations, especially around the digital space. And I think that's driven through, I think, two combinations of factors, really. On the one hand, you've got increasing external regulatory pressures in the form of ESG, for example, and other things like IFRS 17, IFRS 9. And in the UK, there's kind of increasing pressures for introduction of a UK SOX regime around controls. On the other hand, you've got internal driver, which is intensified after the COVID-19 crisis, with greater emphasis on operational excellence and operational resilience. As we've seen, that's a critical success factor. What the COVID crisis have really done as well, in my opinion, is it's shown it's affected financial services just like many other industries. It has demonstrated, though, is that many of its sacred cows when it comes to digital transformation have been killed off, for one of the better sense, because I think it's really demonstrated that organization can change very quickly and rapidly. And since the end of the summer in 2020, what we've seen in the market is that there's a fundamental transformation in the way organizations go about these customers and back office transformation, which is really quite exciting in a different kind of way.
Yeah, I think it goes without saying that, with all the changes that are going on, data obviously is an important part of this. And as we all know, the three of us know, there's just so much data, there's oceans of data when you look at financial services. So Viren, how do you see the connection between the themes that Oliwia was talking about earlier today and data, and how much does data really enable that digital transformation?
Yeah, so if we think about those themes, there's customer experience, adaptability, the automated back office, and what Brendan just mentioned there as well, for example, ESG and other regulation. And if we consider how organizations are approaching these, then I'm sure we will all conclude that there is some level of digital transformation being applied to address those themes. Now, digital transformation means introducing digital enabled processes, for example, mobile banking services to improve customer experience, as well as process automation, for example, the back office automating the onboarding of new employees. Now, key to this transformation, to your point, Jim, is data. So at a basic level, the ability to capture and store large amounts of data quickly, and then to get insight quickly into that data, i.e. analytics, enables digital transformation. So look, as an example, the automation of a credit approval process cannot be done without all the relevant data being captured, stored, and retrieved all in a timely manner. So that's really at a basic level. But at a more advanced level, machine learning and AI need vast amounts of data to introduce features like robo-advisors. So therefore, in my view, data is the enabler for digital transformation, and how well organizations are able to unlock the value of their data will dictate how successful their digital transformation initiatives are, or how successful they will be.
Great. Thanks, Viren. So Brendan, anything that you would want to add to what Viren's saying in terms of the role of data, the importance of data in the whole digital transformation initiatives?
I wholeheartedly agree. I thought I'll give you another example of a recent client kind of experience. So we are helping with some of our financial services clients on the ESG initiative. It's a really hot topic at the moment, but in particular around the area of sustainability and environmental elements. And if you look at financial services, there's going to be a need, an increasing demand from the regulator, how to demonstrate and quantify the financial risk impact in relation to climate change. And if you think about that challenge in itself, it involves a really careful and complex calibration between looking at both the physical risk of changing climate relating to kind of climate events, and also the transitionary risks of moving into a new low carbon society, which is what we're working towards. And I think that calibration at the heart of that work is really bringing together, the data science expertise, as well as our more traditional financial risk modeling kind of expertise. And it's that marriage of technology and data skill set and the business and functional know-how that's really the key to unlocking these kind of transformation programs that will translate into tangible value and benefits for organizations.
Thanks, Brendan. So, when we think about data and realizing value from this, I think one of the big challenges is the fact that in most financial institutions globally, that data is spread throughout the entire organization, and drawing that connection between the back office and the front office operational systems to get the necessary business transactions downstream into the back office accounting environment. What other challenges, Viren, have you seen in that area?
Yeah, well, to that point, Jim, and just to reiterate, look, the biggest challenge that I see that many I see that many organizations aren't setting themselves up to fully reap the benefits of transformation or digital transformation, and it feels like they can do more. So, same as what you've just said, what I'm seeing and hearing is a lot of investment in operational systems, but not in the core functions of the back office, i.e. with HR and finance. So therefore, the organizations aren't synchronizing their front and back office systems in an optimal way. And so what that means is it's inefficient, you get inefficient and costly processes and an inability to unlock real value from their data. So therefore, there's a lack of timely insight, and unnecessary processes and systems are required to reconstruct data for reporting and analytics, which increases the risk of errors and the risk of not making optimal decisions. And I want to add that these finance and HR systems are typically on-premise legacy systems, and that's the real challenge that I'm seeing. And these systems aren't modern; they're not getting the full benefits of cloud. And those benefits are data integration and security. So, to encompass that, generally, I'm seeing that organizations are looking to be digital on the outside, but they need to be digital on the inside too. And not doing so is a big challenge in realizing value from digital transformation.
That's great. So, Brendan, what do you, as you talk to your clients and you work closely with the clients, what are you seeing as some of the challenges that they're facing in trying to unlock value out of this data?
Yeah, Jim. So at the end of the day, for any digital transformation program to be successful, I believe it must be grounded in the business outcomes and benefits. I mean, technology change for the sake of technology change doesn't really work in my experience. I think sometimes we see in the market these large-scale, complex, multi-year digital transformation program kind of forgets its purpose partway through, and it just ended up being, we just need to get the new technology in with very limited linkages back to the original business benefits. I think at KPMG, I think we take a very business-led, business outcome-led approach to doing technology transformation, and this is called Powered Enterprise. What we developed is a suite of functional specific kind of solutions that are tailored to the industry challenges in terms of best practice design around processes, controls, data, and reporting, and working with partners such as Workday and other technology providers to really get the most functionality out for our clients. And for example, in insurance, we've got a great examples of that around IFRS 17. At KPMG, we've built a IFRS 17 calculation engine, and we're working with Workday at the moment to develop, using Prism and using Accounting Center, how that could be serve as an accelerator for clients to implement. But also at the same time, we're rolling out to clients using our tool as an independent testing and validation capability for what they've built. So it kind of brings out the benefit of that technology, but it's really grounded in what they're looking to achieve in these programs.
That's great. So Viren, when you listen to what Brendan had to say about the different ways of unlocking data within the organizations that they work with, how do you see Workday aligning with some of the things that Brendan's been talking about?
Yeah, so I'd like to answer that by giving an overview really of Workday's solution and how what Brendan has just said, how we marry together in getting the business benefits. The technology enables those business benefits as well, alongside a partner like KPMG. So look, Workday provides a single platform for finance, HR, and planning. And with our Accounting Center and Prism Analytics solutions, organizations can synchronize their data and processes more efficiently across operations, finance, and HR. So therefore allowing organizations to really unlock more value from the data. Now, I mentioned it before, but also Workday is built for the cloud, which gives the ability to easily scale with increasing data volumes that we're seeing in this industry. Now, the single platform I mentioned reduces data silos, which means less reconciliation and less need to reconstruct data for reporting purposes. So, and what I really want to call out here is Workday's flexible data model. Now, this is quite key. Now, I've worked a lot in the past with designing data models, for example, a chart of accounts or a finance data model. And those were fixed. You couldn't change them without making massive changes to the system. So that limited an organization's ability to capture new measures as markets and regulations change. So Workday has a flexible data model that allows organizations to easily add new dimensions for new opportunities and challenges. Now, if we put what I've just said all together, the technology here is also helping drive out those business benefits. And it's easy to see how Workday really enables end-to-end transformation. But that's not just me saying this. You've heard that today from both IMC and N26. So these are two data-driven customers, and they're customer-focused financial services organizations that are realizing the value of Workday in enabling digital transformation. And that's across operations, finance, and HR as well.
Thanks, Viren. So guys, many of our listeners today are either just starting their digital transformation, and as we know, as a result of the pandemic itself, it really accelerated the move to the cloud, especially for financial services institutions as they see the value. kind of to wrap up, and maybe I ask each of you, Brenda, start with you. What's some of the advice and key takeaways that you would give to someone in financial services who's about to embark on this journey, or if they've already started, what are some of the key things that they should be looking at, possible pitfalls or whatever, as they embark on this journey?
So I think firstly, the theme of this is, very important. Having a strong data foundation and technology capability that is aligned to your business operating model is crucial, I think, in unlocking insights and automation opportunities. I think this is universally true in my experience, whether this is for regulatory-driven transformation like ESG, or highly technical specialist matter like IFRS 17 or 9, or an operational resilience digital transformation. I think secondly, building on my previous comment about powered enterprise, adopt, not adapt when it comes to solution design. So this is especially key when implementing cloud-based software as a service solution in the back office transformation space, in my experience. And lastly and thirdly, and perhaps most importantly, I call it the right to left principle. So when you start on this, is be very business outcome and use case driven in your design of your data and digital platform to really ensure sustainability and that the user are empowered by the digital transformation at the end of the day.
That's great. Well, thanks, Brendan. And Vera, same question. What's some of the advice and key takeaways that you'd want to give to some of our listeners today?
Sure. That we've all been talking about data for a while. You've heard all the cliches, but it's becoming critical to unlock the value in the data that organizations have and will hold as well in the future. So my advice would be to put in the right technology foundations now. And what I mean by that is a single platform in the cloud. It's about a flexible data model, and it's about combining operational finance and HR data on that platform to really help organizations or help you be more agile, responsive, and competitive. And that's not just now, but also when future opportunities and challenges arise.
Great. Thank you, Viren. So, guys, that kind of brings us to the close here. So, I want, on behalf of Workday, I want to thank both of you for taking the time and spending time with us and sharing your stories and your perspectives with both our customers and prospects. And to all the listeners on the phone, thank you for joining us today. Thanks for participating in the EMEA Industry Insight Conference. And we look forward to working closely with all of you in the future. Thanks, and have a great day, everyone.